Good evening. Today's webinar is Consumer Banking, Good Practices and Common Pitfalls. This webinar is jointly organized by Law Society Pro Bono Services and the Financial Industry Disputes Resolution Center, also known as FIDReC for short. My name is Serene and I am your host. Please note that the discussion and materials provided for this webinar is not intended to substitute any form of professional legal advice. If you require specific legal advice, please consult a lawyer. Let me introduce our panel for today, Ms. Eunice Chua and Ms. Aurel Kam. Eunice is the Chief Executive Officer of FIDReC. Prior to this, she was an assistant professor of law at the Singapore Management University School of Law. In her 12 years of legal practice, Eunice served as an assistant registrar of the Supreme Court, Magistrate of State Courts, and was also the Deputy CEO of the Singapore International Mediation Centre. Aurel is the Director of Legal Clinic LLC. She is a senior litigator with over 28 years of experience spanning both private practice and public service. She has advised on numerous cases throughout her career, including complex civil and commercial claims, regulatory enforcement, and public law matters. Her public service experience includes heading 2 different departments at the Monetary Authority of Singapore and being Deputy Chief Counsel at the Attorney General's Chambers Civil Division. Eunice and Aurel, thank you for joining us today.
Pleasure to be here.
So, Eunice, to kick off, what are the trends you have observed at FIDReC about consumers facing banking issues?
Well, Serene, just to start off with a quick introduction to FIDReC, we handle not only banking disputes, but we also handle disputes from the insurance sector, also against insurance brokers, capital market services, financial advisors. But for today, we'll focus on the banking specifically. And for that, we have observed a trend where we've had more and more complaints against banks and finance companies at FIDReC. You can see from your screen that in 2017 and 2018, we have about 414 cases a year, and this has risen to 531 in the most recent financial year. Hence, this is one of the reasons for us organizing this together with Law Society Pro Bono Services to help consumers understand more about their rights when it comes to consumer banking. In terms of the type of complaints, we actually have 2 big groups of complaints that we see. And you can see from the screen that they are unauthorized transactions and market conduct. We'll go into these today because we have many scenarios designed to explain these points. But very briefly, for unauthorized transactions, we are mainly looking at credit card transactions where the customer perhaps lost their card, or they was victim of a scam or some fraud, and there were transactions that they didn't agree to. And for market conduct, this is a group of cases where it includes misrepresentation. This is where a false statement is made to the customer, and the customer relies on that statement to enter into the contract. And there is also mis-selling. For mis-selling, we are thinking of claims where a product that is not suitable for you, maybe because you couldn't afford it, it is not right for your risk profile, right? It's sold to you and recommended to you, and we call this type of claim mis-selling. And the last big category for market conduct cases would be what we call inappropriate disclosure. So under the MAS requires the finance and banks to actually disclose certain key information about financial products. So if these disclosures are not made correctly, this can also lead to disputes. So this, in a nutshell, is what we've been observing at FIDReC.
Thank you, Eunice. That's really insightful. At this juncture, we are running our first poll. Please take 1 minute to complete the poll on why you are here today. Thank you. Let's look at the results. Looking at the results, we can see that 91% of the audience is here to learn so that you can avoid such issues. 9% has a friend or family who has encountered these issues. Eunice and Oral, do you have any thoughts on the outcome of the first poll?
Well, I
Okay.
was just going to say that from FIDReC's perspective, we are very glad to see that 91% are here to learn to avoid such issues. That is exactly what we want to see, because for us, if people can resolve their disputes and avoid disputes, that will be the best case scenario. Oral?
Yeah, I feel the same way. I feel very heartened by the fact that, most people are here because they want to learn, and they want to avoid getting into those kinds of situations that, create problems for them. I think that's a very good sign because the consumer education piece, to me, is a very key piece to avoiding disputes and difficulties further down the road.
Thank you, all, and Eunice. Let's go on to our second poll. Please take 1 minute to complete on, this is really meant as a reflection point. Why do you think that you or other people encounter such issues? All right, the results are out. So let's take a look. All right, so this is really interesting because I think this question really encourages us to think about, the possible reasons or causes, behind why people may stumble across such issues. So 23% think that there's a lack of awareness of such issues. 46%, which is a bigger majority, thinks that, people should take more time to think and ask further questions. Next, carelessness or feeling pressured, that's about 15%, and 15% for other reasons. Eunice, maybe you could start by sharing your thoughts on the outcome of this poll.
Well, I think this reflects very much what we've seen at FIDReC sometimes, because, well, the 46%, right, taking things at face value is something that any of us could be subject to. We often trust the person that we are dealing with, and we sometimes buy and enter into transactions on trust without fully understanding. And I think that is one of the key factors that lead to miscommunications and misunderstandings.
Or any thoughts on this?
I think it's interesting that the first two questions drew the top two highest responses. In a sense, I see taking things at face value as very much linked or related to lack of awareness. Because if you are not aware, then you don't know what questions to further probe, and what to be skeptical about. So I think again, it comes back to both answers reflecting or indicating to us that actually, if we know more about our rights, know more about what we're buying, then we are in a better position to ask the right questions and protect ourselves.
Hmm. All right, thank you everyone for taking part in the poll. Moving forward, we'll make sure and we'll try to adjust this discussion towards the needs that you've raised. And I think most of the audience will find this webinar useful, as we will be walking through common case scenarios to equip you with the knowledge you need to try to avoid such situations. Before we launch into the scenarios, Eunice, could you share an overview of what is FIDReC and how they assist consumers?
Sure, Serene. For FIDReC, it stands for the Financial Industry Disputes Resolution Center. We are designated by the Monetary Authority of Singapore as the dispute resolution scheme for all financial institutions with retail licenses. So basically, MAS requires that all these banks and other financial institutions subscribe to FIDReC and become our members, so that consumers can have the benefit of our service. We offer an alternative dispute resolution service, and this means that if you have a problem with a bank that you cannot resolve, just between you and the bank, you have an avenue to go to, and you can come to us before going to the courts. We will try to do two things. First is we will try and mediate your dispute. Mediation is a process where we have specially trained case managers who will look into the complaint, and then they will request from the financial institution an investigation report, and from the consumer some details as to their complaint and what is it that is troubling them. From there, we try to see whether we can bring both parties to some kind of zone of possible agreement. So it could be a very commercial and sensible arrangement. It need not be payment of money, but whatever it is that can meet both parties' needs and allow both parties to move forward. So this is what mediation is about. If mediation isn't successful in that there is no settlement agreement, we offer a second stage called adjudication. This is where a consumer can bring their claim before an expert. These experts include people like oral, right? Very senior, experienced lawyers. We also have retired judges, retired industry professionals, and they will look into the case. You will make your submissions to them, present your arguments as to why you should succeed, and you have this neutral expert, right, who is an authority to tell you what the case is in his or her view. So whether or not the consumer should win or the consumer has not successfully proven the case. So this would give everybody some finality. And the beautiful thing about this is whatever happens at FIDReC doesn't affect your legal rights. So even if you are not satisfied with the outcome at FIDReC, this does not affect you. You can still continue to pursue your claim elsewhere if you feel very strongly about it. Yeah. The final thing I should say about FIDReC is because we are such a low cost model, right? So mediation is free for consumers. Adjudication is $50 per claim plus GST. So there is a limit in terms of the size of the claims we can handle. Mediation, we don't impose any strict limits, but at adjudication, our terms of reference only empower our adjudicators to make awards up to $100,000 per claim. Yeah, so that is FIDReC in a nutshell.
Thank you, Eunice. I'm sure the audience is quite pleased to know that there's this other option, and quite a cost-effective option that they can consider if they have any disputes with their banks. Let's move on to our first case scenario. Our first case scenario touches on the use of credit cards. Susan went shopping. She lost her wallet, but the shopping mall concierge called her to return her wallet the next day. Susan then purchased a one-year spa package to be paid by monthly installments on her credit card. Susan purchased a laptop from an online seller using her credit card. At the end of the month, Susan called the bank to tell them to waive the unauthorized online and store transactions charged on her card, to stop monthly payment to the spa as it went out of business. Lastly, to recover the money paid to the online seller as she did not receive the laptop. In response, the bank stated that it was unable to help Susan as it was not successful in obtaining a chargeback. Out of goodwill, the bank offered a 20% discount on the unauthorized transactions. I think let's first try to understand the bank's response. Oral, what does a chargeback mean?
So chargeback is a process when the bank and they have to act in accordance with what is set out in the card scheme. So the bank, pursuant to a dispute resolution mechanism in the card scheme, they initiate a reversal of entry against the merchant, right? And they can do that if there has been a violation by the merchant of card acceptance procedures, or if there has been a failure on the part of the merchant to comply with some of the terms and conditions of the transaction. So, when we buy something and we use a credit card, effectively, the bank has paid our merchant at the point of sale. So when we say that there is a chargeback, what then happens is that the bank is reversing that payment to the merchant on certain grounds, which the bank is permitted to do, and those grounds are actually set out in the card scheme that is between the bank and the merchant. So that is a chargeback. In the scenario that you've just described, I suppose when the bank says they cannot do a chargeback, that they are looking at the terms and they're saying that in respect of that unauthorized transaction, online transaction, they are not able to reverse the entry, and there will be reasons why that is the case, because whether they can or cannot reverse the entry would be dependent on certain rules that would apply.
So looking at you touched on the unauthorized transactions. So what should Susan do in that situation?
Okay, so essentially for unauthorized transaction, in the scenario that we have here, we know that what had happened or what likely happened is that these transactions, we don't know, I mean for a fact, but probably happened after she sort of misplaced her cards, right? When she lost her wallet. Yes. So on your question of what she should do, I would sort of break it down into two parts. One is what she should have done when she realized that she lost her wallet. And then, of course, the other thing on what she should do would be now that she wants to dispute the transaction and the bank saying what the bank has said, which is that I'm going to offer you 20% sort of like a refund should she accept it or not. So let me deal first with the what she should have done when she realized she
Yes.
lost her wallet. Yeah, if you look at most terms and conditions of credit cards companies, they will tell you that the moment you lose your credit card, you are to report it. Okay, and that's what Susan should have done. In your scenario, it's not very clear whether she realized that she lost her wallet only when the concierge called her the next day, or she realized upon getting home. But the key thing that as consumers we need to remember is, as soon as we realize that we've lost our credit card, we need to make a complaint or lodge a report to the card issuing company. Why? Because when you do that, a certain protection mechanism kicks in. Okay, if you do that, then your liability prior to your making that report is limited to $100. So your liability on unauthorized transactions is limited to $100, provided that you didn't act fraudulently, you didn't act in a grossly negligent manner. So in the scenario that you've given, I mean, she lost her wallet unless she, got herself drunk, threw her back on the bench, didn't care, or put her wallet in plain sight, which arguably might be grossly negligent. It would be that it doesn't fall within fraud or gross negligence. So in which event, so long as she informs the card company as soon as reasonably practicable, and those are the keywords, reasonably practicable, she should be able to limit her liability to 100. And in fact, if she does everything right, the bank can even waive that payment of 100. So that is
Thanks
the
all.
protection that kicks in. Yeah.
Yeah, I think that's such a useful piece of information that actually, I guess for everyone to take note that if you lose your wallet or your credit card, even though it's a short period of time, it seems like from based on what you said, you should quickly go and tell the bank so that you can cap your liability to a maximum $100. So also, you already touched on, what she should, steps she should have done, right? Which I think we all can learn from.
Yeah.
But given that what's done is done, what should she do now?
Okay, so usually when you want to dispute a transaction, there is a time limit for you to do it. Most banks would say 14 days. So in fact, once she gets her statement, as soon as possible, she should notify the bank that she is disputing that particular transaction. She will be asked to probably provide information, fill out forms, which she should do promptly. And I would say that in this case, one of the things that she might want to ask herself is whether she had subscribed to an SMS notification alert service, right? Because most credit card companies now would alert you via SMS if there's been a suspicious transaction, or most of them also set a default threshold where if the transaction crosses that threshold, they would alert you, right? So in this case, let me just say something about the threshold. The threshold can be varied. So you can actually go in and say, I want to lower the threshold. In fact, I want you to inform me when it's $10, right? So you can do that. But whatever it is, I think one of the things that Susan needs to sort of keep in mind as well, did she subscribe to this service? And when she subscribed, if she did subscribe to the service, and if she didn't get an SMS alert, then that is something she should highlight to the credit card company, right? Because it would again help make her point that she's really innocent here. And it presents a better case for her in terms of getting all the money back.
Thanks, all. I think your practical suggestion in terms of checking the SMS alert and perhaps even considering to lower the threshold so you're alerted the moment there's something suspicious or something charged on your credit card above a certain amount. Eunice, so how does FIDReC usually handle such situations?
Well, so the first step always is to go to the bank directly, because if you can sort that out, then that is the quickest and the best way. But if within a month you can't do that, that is when you can come to FIDReC. The first thing to do would be to file a dispute resolution form. And this form will set out who the complaint is brought against, what the complaint is about, and you would also attach all the relevant documents. So this form is important because this will allow us to go to the bank and say, look, this is your customer, complaint has been brought. Can you now release information to us? So sometimes people come to us and say, oh, it's so troublesome, I have to fill out all these forms. But we ask for your understanding because we do need it. Sensitive information is going to be shared with us. So once we have all this information and the dispute resolution form is submitted, our case manager will start the mediation process. So the case manager would usually contact the consumer based on the information they have provided in the form. The case manager will ask some follow-up questions. So examples of these questions could be, could you provide us a copy of your agreement for this credit card? Do you have any information on, when did you realize you lost the card, like Oral said, right? When did you receive the statement? Did you have any SMS notifications? So we will try and find out more information from the consumer, flesh out the case. At the same time, we also go to the bank and we ask the bank to submit an investigation report. So the bank will have to go into its records and to try and determine whether a call was made to report, right? If so, when the call was made, if any customer service rep had contacted the consumer, what happened during that conversation. So this report will set out from the bank's perspective what had happened. So now FIDReC, having the view from both sides, will try to either convene a mediation session. So now with COVID-19, we usually communicate through telephone, maybe sometimes video conferencing or email. But in better times, we sometimes also meet in person so that we can have a session with all three parties there. And the whole point of this session or the email correspondences, phone communications, is to try and have both parties understand the situation better. And that will help them to determine how they can move forward. So for example, with the unauthorized transaction, which is a common kind of situation, we will first try and determine whether there is a common understanding as to whether this transaction was authorized or not. Sometimes there is a dispute on that. So one thing that we often see is when you have to key in an OTP, a one-time password, to authorize a transaction. And sometimes for online transactions, many websites now have this verified by Visa, right, or secured by MasterCard. Yeah, so this will make sure that there is an additional step. So if you have keyed in that one-time password, even though later you say, oh, I did not actually authorize this transaction, but from the perspective of the bank, you have, because you have keyed in that one-time password, right? And the transaction has gone through. So we would use the mediation to try and work out these issues, right? If both parties come to a common understanding, this is where they can then move forward, right? So it could be that the consumer comes to a realization that, well, sometimes this happens. Their sibling, right, had used their card without telling them. took their phone, key in the one-time password. So if so, right, then the consumer, comes to the understanding of what happened, tends to just accept the fact and move on. But of course, there is that option of adjudication if the consumer is still wanting to pursue the claim further. At other times, as you said, sometimes the bank will make a goodwill offer. Depending on the circumstances, the percentage of the offer can vary. So it really, there's no kind of general figure that I can suggest to people. But you have to have a good understanding of what your situation is, how strong your case really is, and that will help you to decide whether you should accept that 20% offer or you should try and negotiate for more. Yeah.
Could I ask, pardon this question, but what's the difference between adjudication and litigation? Between choosing to go for adjudication at FIDReC versus taking the matter to the courts?
Ah, well, I think the key difference is the formality of the process. So, what is common is that in both adjudication and going to the court, you have this authoritative figure who sits in a judge role, right? So, in adjudication, this figure is appointed by FIDReC. In the court, right, this figure is appointed by the registry of the court. But where it is different is that in terms of costs, so FIDReC is very low cost, whereas if you go to court, then you would usually need the assistance of a lawyer, or even if you want to bring the case by yourself, then you will have to incur various fees, court fees, filing fees when you submit your claim in court. The court process, there are fixed stages. At FIDReC, the adjudication process is a very simplified type of court process in a way. We just have one round of submissions. So you prepare your argument, you put it down, there's no fixed format for it, and then you can submit it to FIDReC. Whereas in the court, there is something similar, but there are a lot more requirements that you have to meet in order to fill up that required document. So I would say the biggest difference is in a matter of time and cost and the formality of the process.
I
Thanks,
think if I
Eunice.
could just add to that,
Mm.
Eunice, correct me if I'm wrong, but I think in adjudication in FIDReC, if the adjudicator makes a decision, the financial institution is actually bound, but the complainant is not. And it's sort of slanted that way. It's pro-consumer. So if, let's say, the adjudicator takes the view that in this case the bank is only liable for 50%, the financial institution, cannot say, well, I don't accept it. But the complainant can say, I don't accept it. I don't accept that the liability is only 50%. I'm going to sue in court for more. So the complainant has that option. So I think that's one key difference, if I'm not wrong, which works in favor of the consumer. The other one is that it's this whole issue of legal representation, because in FIDReC, the litigant or the complainant goes without lawyer, and the financial institution goes without lawyer as well. So in a sense, the level field is there, right? Because if you go to court, chances are the financial institution will be represented by a lawyer. So you as the litigant then have to decide, do you want to spend money on lawyers, or do you want to go in as a litigant in person? So it is with these sort of pro-consumer attributes, that the FIDReC scheme came about. It's meant, and that's why it's called a efficient, sort of a lower cost dispute resolution scheme. But having said that, I mean, my view is, of course, it may not be suitable for all types of disputes, right? You have some very complicated ones for which it may not be appropriate to have or to try to resolve in FIDReC. Yeah.
Thanks,
Yeah,
Oral.
thanks, Oral.
I
That's
think that's
exactly right.
really, yeah, and I think I did know that actually, in terms of that it's binding for adjudication, it's binding on the banks, but for consumers, you have that flexibility, if I dare say, to choose to go for court proceedings if you're not satisfied with the outcome. So let's turn to the spa, and I think perhaps this is a common situation that most people may deal with. May not be spas, it could be fitness, it could be gyms, but we're dealing with those, payments where you need to pay in installments. So for Susan, is she able to ask the bank to stop payments? Or if you could share your thoughts.
Yeah, sure. So basically, we're looking at monthly payments, right, to a
Yes.
merchant. And in this case, it's an authorized transaction. There is no dispute about it. What we know is that payment was to be made via a installment payment scheme. Now, what actually happens in a scenario like that is that at the point of sale, the bank already pays the full package amount to the SPA. So it is the bank that is extending the credit to the consumer. It is not the SPA, right? So if, let's say, further down the road, the consumer says, well, I now want to terminate, or like in this scenario, the SPA goes out of business. It's actually too late for the consumer to go to the bank to say stop payment, because as far as the bank is concerned, the bank has made full payment, right? And insofar as the bank and the consumer is concerned, the agreement is that the consumer will pay this amount over whatever that period is. But so that's the legal position. That's the legal position. But what happens in practice, of course, is that if you are talking about the termination of an installment payment plan that is not precipitated by, say, insolvency or cessation of business, there is still some wriggle room for negotiation, right? So the bank might be able to go to the SPA and say, look, the customer has to relocate, for instance, cannot now use the package. Will you consider, out of a practice of fairness, to either refund whatever is unutilized or at least a portion of what is unutilized? And if that kind of agreement can be struck, then of course there can be a chargeback to that amount, right? But you have a problem, of course, if the place folds up or it goes into insolvency. Then at that point there is really not much that the consumer can do but to lodge what we call a proof of claim with the liquidator and try to get some money back. But I think most of the stories of gyms and spas that have closed down have really just resulted in consumers getting nothing back.
I think
That's what I think. Yeah.
Yeah, thanks all. I think that really gives a very different complexion to things, because some people may think, it's a monthly installment, so why can't the bank just stop it because it hasn't been, the payment hasn't been made yet. And I think you did shed some light that basically the bank has already paid the merchant and you're actually just paying the bank. So in this case, the bank and the consumer are both innocent parties in this, and is really trying to figure out how do we apportion the risk of it. um, or do you have any thoughts on how you could possibly try to avoid such a situation?
Okay, so there are certain things in life that we cannot change, yeah. One of the
Yes.
things in this scenario which we cannot change is we don't get to control whether the spa continues in business or not. I mean, it either does or it doesn't. And in fact,
Mm,
it might even be a very good spa, but along comes COVID and it has to shut down for
yeah.
6 months, and it folds up anyway. So those are the things we cannot change. Another thing that we cannot change is that if we choose to take up an installment payment plan and make a purchase through the bank, then when the merchant folds up or the merchant no longer operates, our legal obligation as a consumer with the bank remains that we have to pay back the bank. So we can't change all of this. What we can change, I say, and what we can control as a consumer is how much money we want to put into such a structure or a scheme, right? That we sort of put out there at risk. And one thing that obviously we're all familiar with is if you go to spas and gyms, they will tell you the longer a package you purchase, the better the per session pricing is, right? And it's very, very tempting as a consumer to say, a biggest bang for the buck, I go for the biggest package, right? But a bigger package means a longer period of exposure. So, I go to a spa and, I might be able to feel reasonably comfortable that it will be around still in 3 months or 6 months' time. But can I be so sure that it will be around in 12 months or 24 months' time? right? So I may not be so sure. So I would say that as a consumer, we need to exercise discernment and some good judgment. We should I would advocate that we should purchase packages which we feel we can utilize in a relatively, a reasonable period of time, and for which we feel that, look, if I put in this money, even if they fold up, yeah, I would have already used up more than 50 or 60%. My loss is only X dollars. There's nothing worse than buying a 10-year membership, right? And have the club fold out at year 2. Then you'll really be, really upset with yourself. Yeah.
Thanks, Oral. Eunice, so how does FIDReC usually approach such situations?
Well, Serene, I think Oral sort of laid out the territory when it comes to, the bank has actually already made out the payment,
Mm.
and the consumer does have the obligation to pay back. So for this kind of scenario, with companies that go out of business but the installment plan still persists, our experience is that it is very difficult for the consumer to actually get anything back from the bank in this sort of situation, given that the legal position is quite clear. Yeah, but what we can do, in better times, maybe in COVID times this is harder, but in better times there might, as Oral says, be wriggle room in certain situations. Perhaps you are a very, very loyal customer, you have very, very good relations with the bank. Maybe the bank wants to do something to, just out of goodwill. That is also possible. But it is not easy to achieve this sort of outcome for this type of installment payment plan scenario. Yeah.
Mm. Thanks, Eunice. Or let's move to the online seller. And I think quite a number of us, due to the COVID situation, we're doing a lot of online shopping. And perhaps this is a situation that quite a number of us may have encountered. So for the online seller, is Susan able to ask the bank to recover the monies for her?
She should be able to, because she's basically paid for something which she has not received. And remember earlier when I talked about the chargeback, right? That the bank can do a chargeback if there has been a failure on the part of the merchant to comply with the terms and conditions of the transaction. So in this particular case, obviously the merchant has failed to deliver. So what someone like Susan needs to do is she needs to lodge the dispute form early. She needs to make available to the bank all the relevant documents, like her invoice, the sales contract, when delivery was supposed to be made, her correspondence, for instance, with the merchant, to chase for the goods, what the merchant's response was. So this is on the side of making a claim and moving it expeditiously, right, with the card issuing bank. But one sort of word of caution that I wanted to say, and you've just hit the nail on the head, Serene, when you say that all of us, many of us, have been doing a lot of online shopping with COVID and lockdown and all that, is that we really need to make sure that we are buying from trusted and legitimate sites. I'll give you an example. I mean, I was looking to purchase my skincare product, right? And
Mm.
even though it was in phase 2, I said, no, I'll try and avoid going out. So I checked online for the departmental stores, and I found that, yeah, okay, they had some of the things I wanted, didn't have some of the other things. Then I decided to just, do a Google search. And I found what I thought was a fantastic website, because it was offering me the same product at 1/3 of the price. And I was so tempted, right? So I was actually going to place an order and buy, in fact, more than what I would have bought. Then I told
Yeah.
myself, I think I better just do a search on blogs and see what they say about this merchant, right? And that was when I found that there were tons of complaints. People say that they've paid and waited 3 months for their products, didn't arrive, they chased. And then there was a comment there that said, actually, if you are buying in Hong Kong, it's okay. But if you're buying outside of Hong Kong, your experience would be very, very different. So I think unless it's a very well-known site, you really should sort of take that extra step to check. It might still be a legitimate site, but it may just be very, very poor and unreliable at delivery.
Thanks, Oral. I think you're highlighting a key point, which is the importance of due diligence or doing some research into the potential online seller. Is really at your risk if the seller doesn't deliver the goods or the goods are faulty. We received one question from our audience. This is with regard to chargeback. So for the chargeback, is it a specific set of banking rules and regulations that govern it, or is it a matter of contract between the bank and the customer?
The chargeback is determined by the card scheme, which is the sets of terms that govern the relationship between the merchant and the card issuing bank.
Thanks,
And
Oral.
of course, there is some overlap with the terms between the merchant and the customer, but they're not exactly the same.
All right, so let's move to the next scenario. We have a gentle reminder that the audience can submit their questions in the Q&A panel. So our next scenario deals with a housing loan. John takes a housing loan from the bank with a floating rate pegged to SIBOR. The bank's housing loan personnel tells John that SIBOR rate will probably not go above X% based on historical data. Next year, the economy caused the SIBOR rate to increase. John complained to the bank. After investigation, the bank found no wrongdoing as the bank's housing loan personnel had told John that the rate was a floating rate and not a fixed rate. I think John may feel frustrated because, when he was thinking about should I take a floating rate or fixed rate, what the bank's housing loan personnel told him may have impacted his decision. So maybe, Oral, could you tell us a bit more of why the bank is not bound by what its personnel has said?
Um, if I could approach this scenario this way, in this scenario, I don't see the bank saying that they are not bound by what the personnel has said. What I do see the bank saying is that the bank has said there is no wrongdoing. And they gave the reason. The bank says there's no wrongdoing because our personnel told the customer that the rate was a floating rate and not a fixed rate. Okay, so the reason why I highlight this is in these sorts of scenario, it is very important to consider and scrutinize what statements the bank personnel is alleged to have made. And in this scenario, we see at least two statements that the bank personnel made. The bank personnel made the statement that SIBOR will probably not go above X based on historical data. Then the bank personnel, it would seem, made another statement. And that statement is that this rate that you are signing on to, SIBOR, is a floating and not a fixed rate. Or the rate that you're signing on to, which is pegged to SIBOR, right, is a floating rate and not a fixed rate. So those are the two statements that has been made by the bank loan personnel. Now, when we examine the accuracy or the inaccuracy of the statements, we have to look at exactly what was said, right? So in this case, if you look at the first statement, SIBOR will probably not go above X based on historical data. One question that we're going to have to examine is, well, what is the historical data, right? If based on the historical data, we've never seen SIBOR go above X, then technically speaking, there's no inaccuracy there. But more importantly, this statement, SIBOR will probably not go above X, is not a statement of fact, right? If you look at it and you scrutinize it, it's a statement of opinion, it's a view, okay? And you remember what Eunice mentioned earlier when she talked about market conduct, right? She says market conduct, there is this misrepresentation genre of cases, there's mis-selling. So in this scenario, we're looking at misrepresentation. Has there been a misrepresentation? Now, under the law of misrepresentation, there must have been a statement, a false or misleading statement made or representation made as to fact. Okay, so something like that would be quite hard to succeed in misrepresentation because this representation here is a representation as to opinion or view, not fact, right? So if you look at this in fairness, what went wrong? What went wrong is that the prediction, right, of where SIBOR would land went wrong.
Yes.
Okay, yeah. So the cause of action or the claim cannot be in misrepresentation, right? It would have to be in something which we call negligent advice. Ah, so the question would be, can you bring a claim against the bank for negligent advice? I'll say probably not. Why? Because most bank documents will say very, very clearly that you are going to make your own decision on whether you want to take the loan or not. They're not advising you on whether to take the loan. They're just telling you what the terms are, right? So when I look at this scenario, I can't see that there has been wrongdoing because clearly what was represented as a fact is accurate. The fact here being this is a floating rate, it's not a fixed rate. The other statement that potentially might raise issues, the one where the sort of the punt went wrong, so to speak, was a statement of opinion, not fact. Yeah.
Mm. I think you brought up such an interesting point, which is, when the personnel or whoever basically is telling you more about a certain product, is it really a statement of fact, or is it just their own personal opinion on what they think the situation is? So I think maybe this is something, an area that, I guess the audience can be careful of or to take note of. So what are, good practices that customers can adopt to avoid falling into such a situation? Perhaps, in, I guess, the enthusiasm, in trying to, explain to the customer more about a housing loan, maybe a lot of opinions are expressed. So is there anything or any advice you would, tell our audience to take note of?
Mm. I would say we have to do our own homework, as somebody who wants to take a loan, because we need to remember that loans are actually not financial products, okay?
Mm,
And that means that you're not really taking advice for loans. You may go to the bank and say, I want a loan, and they may say, well, this is what we have available, right? That's just providing you with information, but ultimately you make your own decision on which loan to take, unless of course you look for somebody who's going to advise you and you pay him a fee to advise you based on your financial abilities or whatever it is, which loan to take. But typically people don't engage an advisor uh, on loans, right? So loan is basically, it's like just you buying something or choosing an insurance, or well, insurance is a poor example, but choosing a certain option, right? So I think we need to do our own homework when we go for loans. We need to do our own comparisons. I think at least minimally when you go to the bank, ask for a customer information sheet. Know exactly what this bank is offering you, and compare it against what other banks are offering you. And then you need to sort of understand. If you don't understand what is the SIBOR or what are the different rates. In fact, we're moving out of SIBOR into a different rate system. So you need to understand what that rate system is, right? And also between fixed or floating rates, there are pluses and minuses. A lot of them have financial impact further down the road. So these are all decisions we need to consider
mm.
and make our own decisions on.
So I think you mentioned about, it's unlikely that you would have an external advisor who will be advising you on which loan to take. But I think for maybe some people, they may be engaging property agents, and actually their property agent, for example, perhaps, who refers them to the bank's housing loan personnel. And perhaps, the property agent may make certain statements about the loan, in terms of the fixed or floating. So would the banks be bound by any statements made by the property agent?
In fact, the property agent is two steps removed, right? I mean,
Mm,
they're obviously not an employee of the bank. They're not even, I don't think you can say that they're an agent of the bank. So they're quite separate and independent. And usually this is sort of like just a referral. Um, I would say that, as a consumer, if you are being um, referred by a property agent to go with bank A or bank B, you can consider, but you probably shouldn't take, or give too much weight to what the property agent is telling you about comparative loans and all that. Again, it's back to the same basic rule. You got to do your own homework. And the other thing about doing your own homework is that at the end of the day, it is a very competitive market right now. And I would think that depending on your relationship with a particular bank, there is always a possibility that you can get better rates, than what is available on the shelf, so to speak, if you actually speak to your banker.
Thanks all. Eunice, in terms of dealing with such situations, could you share a bit of your experience about how FIDReC handles such complaints?
Mm. Well, for misrepresentation type of complaints, at the mediation stage, one of the key things is to try and help the consumer understand how he or she can actually persuade the bank that there has been this misrepresentation and that they were entitled to rely on it. So we often ask consumers whether they have any, messages, emails, any kind of documented evidence, right, to show that such a statement is made. So actually one tip that I would like to share with the audience is really in our day-to-day transactions, it's good to keep a record. So in the event anything goes wrong, right, at least you have something to show that this was actually said to you. So if something is really so important, right, have it written down somewhere, yeah, so that this is some assurance for you that you can at least establish this. So we often have situations where the consumer wants to try and have the bank go and review phone records and so on. So consumers should also be aware that banks don't keep these records forever. Yeah, under the law, there's only a requirement to keep for a certain number of years. So you should also bring your complainer as soon as possible so that such evidence is still around. So this is a tip for trying to persuade the bank that you do have some kind of justification and that they should enter into a settlement agreement with you. But if that fails and you have to go on to adjudication, this is then where it is very important to show your evidence to the adjudicator, because bear in mind the adjudicator takes a very neutral position. So FIDReC is not a consumer association, right? We are an alternative dispute resolution center. So the adjudicator does have to assess based on what evidence you can show. So even though you have in your mind that you have this very good case, a very strong case, if the bank on the other hand can show some evidence, right, that counters your case, then it may not look so good for you, right? But on the other hand, if you can show the evidence that this is a statement of fact that was made, it turned out to be false, right? You show some WhatsApp exchanges where you had actually questioned the representative about this statement because it was so important to you, right? So it demonstrates the importance of that statement. Then it starts looking better for the consumer. Yeah.
Serene, before we leave this, I just thought that I should
Sure.
mention, uh, that it is very usual to find in banking documents a clause, a provision that will say something along the lines that no oral representation or warranty or statements that may have been made are binding on the bank, and that all applicable terms are as contained in the written documents. So I raise this because there have been many, many cases, and some of them have gone to the courts, not just in Singapore, but in jurisdictions like the UK and Hong Kong, where the consumer says, when I bought this product, I was told A, B, C, D, E, and those were representations of fact, that this product does this, but it has failed to deliver, that this product is actually not capital protected, for instance. So you get things like that, right? And it's an uphill climb for the consumer to succeed in these sorts of cases when you have statements like that. Okay, there have been also cases where consumers have said, oh, the bank's personnel told me that this provision, yeah, doesn't apply to me. this cap on liability doesn't apply to me, right? But this is exactly where the kind of provision that I've just mentioned kicks in, because the bank has already set out in the terms and conditions that oral representations do not bind. Okay, so consumers need to be aware that this is quite a standard term, and that sort of highlights the importance that consumers must read the printed terms. They must read the fine print. You should listen to what the bank employee is telling you, but you should read the fine print. And if you see that the fine print is inconsistent with what is being represented to you verbally, you must raise it, right? And actually, if you raise it, I think in most cases, you will be told by the bank employee it is the written terms that govern. Okay,
Mm.
if you are actually so lucky as to be told that this is not going to apply to you, then I think you should say to the bank, I want it in writing, or I want this term struck out, and we both countersign on it. And you might be able to get a scenario where the bank, if your relationship is important enough, the bank might be prepared to do that, right? But my point is, you cannot substitute what is in the written form with what has been said to you orally, and hope that in a dispute, what has been articulated orally will prevail over the written terms. So you have to take steps to protect yourself.
Mm. Thank you so much, Oral and Eunice. I think those are such useful tips. I think from Eunice, basically make sure you keep a good record. And especially when you're dealing with a housing loan, which I think for most of us is the biggest amount of money that you'll be borrowing, it's really important to keep proper records. I think for Oral, so useful to know that there's that clause in the contract where basically if it's verbal, it would not be captured under the agreement. So if something's really important to you, it is important to have it in writing.
Mm.
Let's move on to our next scenario. We touched on investment products. I pause here to remind the audience that if you have any questions, please submit them in the Q&A panel. Sam's elderly mother went to the bank to place money in a fixed deposit account. The bank officer asked Sam's mother if she's interested in getting a better interest rate. When Sam's mother said yes, the bank officer introduces her to an insurance specialist. Sam's mother purchased a savings plan, thinking that she can withdraw at any time if needed. 6 months later, Sam's mother tried to withdraw from the savings plan, but was told that it was an insurance policy and any early withdrawal would incur very high penalties. Sam's mother asked Sam for advice. This is a twist from the earlier scenario as it involves a vulnerable friend or family member. Oral, what do you think that Sam should do in this situation?
Um, maybe before directly answering that question, just want to sort of contextualize this. So yes, I mean, you're right. One of the key difference here is that we're talking about an elderly uh, person, elderly consumer. But the other key sort of difference here is that under this scenario, we are looking at an investment product, a financial product, as opposed to a housing loan. And why that is significant is that when a financial institution sells an investment product, there are certain rules that they have to follow. All right. They have to do what is known as a financial needs analysis. Um, and then they must have a basis for recommending whatever they recommend to someone to buy. Going back to again, what Eunice mentioned right at the beginning, and when she was talking about market conduct, right? She says there's misrepresentation and there's mis-selling. So in mis-selling, what you have happening is that the financial institution sells a product that is not suitable for the needs of the consumer, right? And how do we know whether something is suitable for the needs of the consumer? Uh, that is the reason why the bank has to do a needs analysis and must have a proper basis for recommending a particular product. So these are key processes, two things they have to do, right? Do a needs analysis. After that, must have a basis for recommending a product to the consumer. If you fail to do that, that's a mis-selling. If there is a mis-selling, there is a piece of legislation called the Financial Advisors Act, which has provisions that allow the consumer to sue the financial advisor for any losses that he or she may have incurred as a result of purchasing that product. Okay, so that is the key difference in the context, and it is also in this context that the relevance of a vulnerable customer comes in, because you've asked about a vulnerable customer. You said that this is one of the key defining differences. Um, so going back, yeah, to needs
Yes.
analysis and recommendation, special protections, additional protections are contemplated and expected when you are dealing with a vulnerable consumer, right? That would not apply to, say, your usual well-educated, slightly more sophisticated type of consumer.
So what would be considered, I guess, in the bank's eyes, a vulnerable consumer?
Um, there is no sort of fixed definition, but the indicia of a consumer who may be vulnerable would perhaps be somebody of a lower education level. Uh, Linguistically, if you are dealing with documents in English and it's somebody who's not fluent in English, then that's a potential indicia of somebody who's vulnerable. You look at the age. Um, you look at whether the person is perhaps unemployed, retired, or putting a significant part of the savings, life savings, into the product. Because we remember, right, you're supposed to do a needs analysis, and in a needs analysis they are supposed to find out, well, what job do you do, how much income do you have, what are your financial objectives, what is your time horizon for getting back returns. They're supposed to ask you all these sorts of questions. So from all of these questions, the financial advisor should be in a position to know, am I dealing with a vulnerable consumer or not?
Mm. So let's say, I mean, I think it's great to know that banks do have these safeguards that they're supposed to follow if they encounter consumers, especially vulnerable consumers. But I suppose let's, take this hypothetical situation where, unfortunately, Sam's mother has already bought that savings plan, which turned out to be quite different from what she understood. So what advice do you have for Sam's mother to, in terms of dealing with this situation?
As in how to resolve the plight
Yes,
that she
how
finds
to,
herself in.
yes. Is it possible for her to go to the bank and said, what I'm told is very different from what I understood. Could you just give me back my money?
Yeah. So yes, going back to what Eunice mentioned earlier, the first port of call is always try and talk to the financial advisor, right? So all banks and financial institutions, as part of their, dealing fairly with customer program, must have a sort of a complaints hotline of sorts that will take and receive these sorts of feedback. So that's the first thing that Sam's mother should do, right? Go and lodge a complaint and say, look, this is what happened to me. Obviously, the more information that you are able to provide, the documents and all that, the better it will be for you, right? So I guess if Sam is helping, I don't know whether Sam is Samantha or Samuel, but it's
Let's say the guy, Sam, yes.
okay. So Sam, the guy, which should help his mother put together sort of like a pack, right, to give to the bank, bearing in mind what the financial advisors was supposed to do. Now, typically, financial advisor, if they filled up some forms for you and did your needs analysis, they should have given you a copy, right? So he should ask his mom, do you have a copy of this? Give this to me. He should get all the documents, the needs analysis, the recommendation, the product information sheet that was given to her, and the agreement that was eventually signed to purchase the product. Should get all of this, right?
Sorry, just to
Sometimes,
pause. Sorry, just to
yeah,
pause here. I received a question from the audience. When you mentioned about a bank needing to do a needs analysis, is it something that they are obliged to do under law, or it's something that the bank does as a matter of policy?
they're obliged to do if they're selling an investment product.
So it's a legal requirement under the law.
Yes, but
Okay.
sometimes you as the consumer may not know that they are doing a needs analysis because it's sort of like a chat. They'll ask you, oh, I need to ask you some questions, and then they'll
Mm,
start filling up a form. So you may not be aware that this is a needs analysis taking place, but they are required to do that.
mm. All right.
Yeah.
Thank you so much.
So, so yeah.
Maybe dealing with a situation where Sam is on the sidelines and he's his mother's in this situation. I suppose moving forward, what advice do you have for Sam in terms of educating and his protecting his mother against such situations in the future?
I think you should say to mom, please don't buy any products without discussing with us. And if you go to the bank, don't be pressurized by what they, try to sell to you. You are entitled to take your time. Uh, he should also say to mom, actually you are entitled to change your mind because they're supposed to give you 14 days to consider, there's this free look period, right? So when you have that opportunity to reconsider, come and talk to us about it. So he should actually be telling his mom to involve him or his siblings or relatives, right, in these sorts of major decisions.
An audience member raised a rather useful point, which is basically, reminding the audience that, the need to be honest when, the bank personnel is asking you such questions. Don't overstate your experience or knowledge in dealing with such products, because, you might encounter or end up in this such situation if the bank determines, based on your response, that, that you are suitable for the product. Do you have
Yeah,
any
that's an
comments on
excellent.
that?
No,
Yes.
it's an excellent point. I mean, when they're doing a needs analysis, one has to be absolutely truthful,
Mm,
and don't sort of like, if your income level is X, don't feel shy to say it is X, right? Yeah.
mm. All
Yeah, and
right.
I
Thank
think
you
just
so
to chip
much.
in here, we do
Yes.
see a number of cases at FIDReC where the financial needs analysis, it says one thing, but the consumer says, no, that is not the situation, But actually, the bank will then take out the document and then they will point to that portion of the document and then show that the consumer has signed at the bottom, right? Because often you're asked to sign on each page of this financial needs analysis, this document
Mm.
that Aura was talking about. So I think, not only be very honest when you come and share about your financial situation with the bank representative, but also make sure before you sign, that what you have said is correctly reflected. Yeah, because in those kinds of situations, it then becomes very difficult to establish what really happened. Yeah.
Yeah, and just to add to that, I think I've seen many cases where there's a tendency on the financial advisor to say to the consumer, oh, this is just some forms we have to file. This MAS requires us to
Mm,
fill up these forms. There's a little bit of that, but I think as the consumer, perhaps we need to realize that actually this is for our protection, and we shouldn't take that as a troublesome, inconvenient form filling exercise. We should sort of see it as our opportunity to set out the accurate facts, because these facts can help us if somehow we've been taken advantage of, right? So
thanks.
it's important to recognize that opportunity to protect ourselves.
Thanks all. Eunice, do you have any other comments to add based on your experience at FIDReC for this scenario?
Well, I think for this scenario, there are a few things. often when this kind of case comes to FIDReC and during the mediation process, we will unearth that there is some inconsistency between what the consumer has said and what the documentation has recorded. Yeah. So this goes back just to emphasize that point. Before you sign something, right, just make sure that it is correct. Yeah. Or get someone to take a look at it before you sign. There is never any hurry to purchase or to sign on that very day, on that very moment. Yeah. An earlier point we made about keeping your records is also very important. So a related point is, so Oral said that the bank must send you these documents that you have signed for you to keep a copy. But often we encounter situations where the customer did not update their personal records with the bank. So the bank will say, yeah, I sent, and then they'll show the evidence that they've sent. And then to realize that, oh, the consumer had moved, changed their email address and they did not actually receive. So then this becomes another situation where, oh dear, it could have been prevented, right? If you had kept the record updated. The final aspect that I wanted to cover with this scenario is that where a vulnerable person is involved, there is often a lot of emotion because as I mean, if you put yourself in Sam's shoes, right, he obviously will feel very angry. He will feel like his mom was cheated. He will of course take his mom's side on this, and we can understand that from just being a very human perspective. But in mediation and adjudication, it's important also to be able to just take a step out and try and look at the situation with a more objective lens. And that is where someone in Sam's shoes can really help the mom. At FIDReC, if the complainant is not fluent in English, he or she can appoint a nominee to advise and to help them along the process. So in this situation, mom might appoint Sam to be the nominee. And during the mediation, it would be very helpful if Sam not only, helps to translate for mom, but also, can contribute in terms of looking at the situation objectively, keeping an open mind as to the possible options. So some of the options that we can work out in the mediation, Oral talked about, the legal position. But at mediation, you have a chance to kind of work out an arrangement. And sometimes you can negotiate with the bank. And if the insurance company agrees, you can actually make adjustments to the policy. Yeah. So for example, if you need, if you want a shorter term, right? If the policy was actually over, 20 years, but there's actually a 10-year option or a 15-year option, right? You can kind of adjust your policy term. You can adjust the policy cover if it turns out that you can't afford to pay those premiums, right? So there is some room to talk about creative solutions before you actually move to the adjudication stage. So this is where Sam can be very, very helpful to mom by helping her understand the different options and seeing whether there is a middle ground that she can accept. Yeah.
Thank you, Eunice. And thank you all for that very informative session. Before we move to the Q&A session, I would like to remind our audience that you can still submit questions to the questions panel on your screen. So our first question comes from someone who's very concerned that his elderly relative has been deceived by an online scam and insists on wanting to transfer money to an overseas person who the person suspects to be a scammer. Is there any possibility that this concerned relative could ask the bank to stop the transfer?
I think it's going to be difficult because, well, I mean, obviously, this is information that they can pass on to the bank, but the bank will not actually be at liberty to discuss the customer's account or dealings with this relative, right? Because there's a relationship of confidentiality. So I take it that this is just a relative. It's not even mom or dad or anything like that. So yes, I mean, obviously, what this individual should do is, I think, highlight to the bank. I I would imagine that if this elderly person has got other relatives, perhaps our audience, member of the audience, should also be informing the other relatives, and they as a family or as friends should do their best to counsel the individual.
I think appreciate the point that, at the end of the day, the customer of the bank is still the relative, and the bank is very much obliged to listen to its own customer in terms of how he or she wants to deal with their money. But let's say if indeed that relative does go ahead and transfer the money, does the bank have any responsibility if it turns out to be a scam?
I don't think so. I mean, unless there were red flags, in fact, the way I see it, right, and many times we've heard stories of how bank officers have been alert, and they managed to sort of save the day. They were the heroes that stopped transactions from getting through and elderly persons from being cheated. But that's just really the bank going beyond what they have to do. I think that if a customer insists on making a transfer, and the bank acted in accordance with the customer's instructions, the bank cannot be liable, right? Of course, it's very different if it's obvious to the bank when, let's say, the elderly person goes to the counter and the elderly person looks like the faculties are not all together there, disorientated and all that. If those are the signs, then query whether the bank should question the capacity of the customer to give instructions. But all things being equal, if there is no reason for the bank to suspect that the customer lacks the mental capacity, I think the bank could possibly at risk of being of failing to act in accordance with the mandate if they refuse to execute a customer's instructions.
Thank you
And just to,
all.
to chip in a little bit,
Sure.
I think nowadays scams are getting more and more common, and they are also part of this group of unauthorized transaction claims that we see at FIDReC, and it forms a big chunk of our caseload. And I think I'm very glad for this question because it shows that we are looking out for each other. And I think, given how difficult it is for the authorities to actually clamp down on this type of scams because they can be anywhere, it's difficult to stop. But on our part, we really have to look out for each other, and try to. So if you have a vulnerable relative, you might want to make sure that he or she is kind of connected, sharing information rather than sort of isolated, and not no one knows what he or she is doing with their finances, right? Not to say that we should interfere, but it's good to be connected so that these vulnerable elderly relatives of ours are not, susceptible to falling prey, because they know that they have a family network that they can count on for advice. Yeah.
Yeah, and just to add to that, I mean, there's been so many stories about online scams, and I think it's kind of helpful, again, for that member of audience to maybe share it with this relative to say, hey, this is real. I mean, if you look at the statistics, look at the type of scenarios, where these scammers operate, there are lots of them out there. I mean, it's really to help that relative see reason and know that this is prevalent at this point in time.
Thank you so much, all and Eunice. The next question we have is maybe a little bit of extension on the housing loan situation. So in this case, an audience member mentioned that, he's assisted by a mortgage advisor who was, obviously as a mortgage advisor, was very helpful in terms of sharing information about the different banks and recommending to him which loan they think makes sense. Unfortunately, there was no agreement signed. So if there's no agreement signed and later the consumer finds that maybe he has received wrong advice or maybe inaccurate advice or incomplete advice, is there any way that he can go back to the mortgage advisor?
So this would fall, I think, within the realms of what we call negligent advice. I mean, you can actually still be liable in law under the, what we call for negligent misstatements, right? It is possible. But it really depends on the circumstances. I mean, was a fee paid? Was it gratuitous? In what kind of a context was that advice given? So potentially, yes, if somebody chooses to give advice, and particularly if they take a fee for it, even if there is no written agreement signed, if as a result of relying on that advice, which then turns out to be negligent, you have suffered loss. As a matter of principle, you can pursue legal recourse. But of course, we're talking here in very broad terms, right? It's going to depend a lot on the facts. Whether the advice was negligent, under what circumstances was the advice given.
Mm.
And just to chip in a little bit, another thing that we see quite often at FIDReC that we should, I think is good to bring up here, is that when people bring claims against their banks, they often find that they have not quantified what their loss is. So you might feel that, oh, the situation now doesn't seem so favorable, right? You would feel that you are hard done by, you feel that you were cheated, the advice was wrong. But are you actually suffering a loss? Can you show that this loss was caused by this advice that was given to you? So this is another point for the audience to think about. So not only in housing loan scenarios, but particularly with sort of investment product scenarios as well, um, you cannot on the one hand hold on to the product and try and claim against the financial institution, and then hope that down the road your situation will improve. Yeah.
Right. Next question. I think for a lot of parents, children are at home nowadays because of the circuit breaker, and basically they could borrow their parents' phone to play games. So this situation deals with a child who is playing games on his parents' mobile phone and went to buy in-app game items such as loot boxes without, of course, the knowledge of the parent. So I suppose, is there any way the parents can try to persuade the bank to reverse the charges or to stop payment?
Interesting. I will take a stab at this. I
Sure.
I think that if as a parent, you've passed your phone to your kid and you didn't sort of put safeguards around it, uh, might be a little tough, right?
Mm,
Yeah, might be a little tough. You can speak to the bank and see if the bank will speak to the merchant, because there's always that option. I mean, there is no rule or no bar against your going to the bank to say, look, these are my circumstances, would you please
mm,
see if a chargeback can be effected? So I think that's worth trying. And for all the bank speaking to the merchant might say, well, this being the case, and I'm a responsible entity or merchant, I'm going to do the refund. It is entirely possible. So I would say it's worth trying. But if the merchant says no, then I think it may be hard for the parent then to say to the bank, I insist on a refund. I
And
don't know,
just to
Eunice,
add
uh,
what do you
that,
think? Yeah.
yeah, just to add another perspective, we see similar kinds of cases at FIDReC, and I think sometimes people expect more from banks because banks are more well resourced, right? And they think that it is only fair that the bank kind of waive that payment. But on the other side, I think Oral has explained to us that in these situations, there is no stopping payment because the bank has paid the merchant, right? And unless they can effect a chargeback, the bank will be out of pocket essentially. And banks don't like to be out of pocket, just as how we don't like to be out of pocket, especially where they can't find find wrongdoing on their own part or the part of their staff, right? So I think that's where Oral is coming from when she says it might be challenging in this kind of scenario, but it is worth trying because there is this chargeback procedure, right? You should go in and try to use it to your benefit, but recognize that there are some limitations in that. If the chargeback is not successful, it doesn't then mean that the bank becomes responsible, right? There is no kind of transfer of responsibility to the bank once the merchant has disagreed to that chargeback. Yeah.
Thank you, Eunice and all. I think there was a lot of good information and advice shared today. I think if the audience was to take away maybe two key points, what would this be? Maybe all if you could start first and just let us know two key points you think that the audience should take away.
Okay, so I think the first key point I want to make is that consumer protection is the shared responsibility of banks, of bank employees, and of the consumer themselves. So that's the first point I like our audience to remember. The second point I think I would make is that ultimately it's your money. And so, remember that in this world that we live in, for better for worse, the written document rules. So it is never there's never an excuse to sort of like check out and say, I've heard some verbal representation from the employee, and therefore I don't need to read the terms. You always have to go back to the fine prints and make sure you understand what you're buying, what you're getting yourself into.
So Eunice, what are your two key takeaways from today's webinar?
I definitely agree with Oral's takeaways. But from the FIDReC perspective, I think for me, the two would be first, please know that FIDReC is an option. If you have tried to communicate with the bank and you have not managed to come to a satisfactory conclusion, you can come to FIDReC, right? We are here to see whether we can facilitate a smoother negotiation, and at least you have a chance to if you even if you don't succeed in mediation and you go on to adjudication, at least you have a neutral third party give you a view, and that might give you some finality and some reassurance. The other point is, as FIDReC, we are not miracle workers, so we don't have powers to force the banks to do certain things. But what we can do and what we realize is that banks are made up of reasonable people, right? And if you work with us, we can work with you to see whether we can persuade the bank to do what it can within its means, within reason, to see whether there can be a solution. So for example, in that misrepresentation scenario or mis-selling scenario where you end up with a insurance product that you cannot afford, there might be ways that you can tweak the arrangement. Or if you took out a loan and you're having difficulties paying back, then you can talk about how to structure payments and so on and so forth. So within reason, there is scope for negotiation. So keep an open mind and try and work with us. We will do our best to help. And if we can't, then of course we will send you to people like Oral, who will give you a clear view of what they think the position is.
Thank you, Eunice. Thank you all. I'm afraid we have to bring our session to a close. Please remember to download the useful resources regarding the issues discussed today. After this webinar, we will send a feedback form for your completion. We appreciate your feedback so that we can make our webinars better for you. Thank you, Eunice, and all again for your valuable insights. And from all of us at Law Society Pro Bono Services, thank all of you for joining us today and have a good night.
Thank you.
Thank you. Good night,
Thanks. Bye.
everyone.